I'm James Turk. I'm a director of the GoldMoney Foundation. It's my pleasure to be here today with Ronald-Peter Stöferle of Erste Bank and the author of In Gold We Trust, which came out in early July and I think took the entire globe by a whirlwind in terms of the popularity at that point it was received. Tell me a little bit about the background of that particular report and why you put it together.
Hi James, thanks for having me again.
Yeah.
Well, it's my 5th report on gold, and I think I hope it was the best, and I think from a timing perspective, it's also been pretty good. We issued it beginning of July, and then the gold price seriously started taking off, and then we had this kind of parabolic move in August. And I think what was really interesting was that I covered some of the topics that are only rarely analyzed in the gold business. For example, the stock-to-flow ratio, which is, from my point of view, really essential to understand gold. And I've also been writing about the monetary aspect of gold in length, as you wouldn't expect it normally from a banking institution. And yeah, I'm kind of nervous about the next gold report because I don't know what to write anymore, but I think it's, yeah.
The stock-to-flow ratio is something that I follow very closely, and just to put that into context, because people may not be familiar with that or haven't read your report, but it's the above-ground stock of gold and how that above-ground stock is added every year by new mining production, which is approximately 1 3/4% per annum, fairly consistently over a long period of time. And the conclusion is basically that what's important is the gold that already exists, not necessarily what's added to that above ground stock at any moment in time. The logic being that gold mined by the Romans 2,000 years ago is identical to gold mined yesterday in Nevada.
Exactly. And I think that's what many gold analysts or analysts at all don't really get, because I often read that, okay, gold price can't really fall because the mine supply is more or less flat and so on. But I mean, if mine supply would increase by 10%, it wouldn't be for the total stock of gold, that wouldn't have a big impact. And the total gold supply grows by, I think, 1.5 or 1.6% every year, almost like the population growth. And,
right.
And I think this kind of guarantees trust that there's not going to be a very inflationary movement for the price of gold. And I think this kind of trust is what everybody's kind of losing now in fiat currencies.
Yeah, understood. So money, like every other economic good and service, is a function of supply and demand. The supply of gold remains relatively constant. What changes is the demand for gold. And the demand for gold can change up or down depending on people's confidence in the monetary system, the price of gold. Somebody who is a holder at $1,800 an ounce might be a seller at $2,200 an ounce. And conversely, somebody who owns no gold at $1,800 might be a buyer at $2,200. So it's a demand factor that's more important ultimately than the supply, because the supply is relatively constant.
Absolutely, and I think this also kind of smoothed the uptrend. And on the other hand, this factor is kind of crucial because, for example, in copper or in oil, both commodities and if there are supply disruptions or if there's a huge oil finding, for example, that has got a much bigger impact than on gold. And I think this is perhaps the very central point that I honestly got like 2 or 3 years ago, and then I started to realize how important this stock-to-flow ratio is, and that's why I covered it in my last report.
Yeah, to me it's essential to the whole idea behind bullion as a form of money. And the way I explain it is that gold is not even, in my view, a commodity. It's a tangible asset, but it's money. And the reason why it's money and different from commodities like crude oil are produced, consumed, and disappear, and have a very small above ground stock, which is why the stock to flow of a commodity is very significant because production can change the above ground stock relatively quickly in a short period of time. But gold, on the other hand, because it has this huge above ground stock and it's the only asset we produce for accumulation and does not disappear, we hold it for a different reason. It's not because it can be consumed or produce wealth like other things do, but because it's money and useful for economic calculation. So to me, that's the whole essence of, gold is money.
Absolutely.
Is your report still available from the Erste Bank website?
Absolutely, sure.
And I think it is also published by GATA, so it could probably be downloaded by the GATA.org
GATA
website.
webpage. Just Google in Gold We Trust 2011 and there's Zero Hedge and on German Goldseiten.de.
I'm sure it's all over the place.
Absolutely.
Was it in German as well?
German and in English.
In English. Any other languages or just those two?
Hopefully Chinese next year.
Oh, okay.
That would make sense.
Yeah, definitely would, given the interest that the Chinese have in gold. Talking about GATA, we were both at the GATA conference in London. What were your impressions of that conference?
It was really, really special, and I think it was by far the best conference that I've ever attended. Not only the speakers, but also the guests. There were I think 400 guests from 38 different countries. I've met really bright, intelligent and fun people, and I think we all had a great time. And especially, I'm reading and writing about gold quite a lot, so there's not too much new anymore. But at this conference I heard, there was Jim Rickards, there was Andrew Maguire, it was really interesting presentation. There was Jim Sinclair, and I'm really looking forward to the next GATA conference.
Yeah, I don't know if they've announced anything yet, but I would encourage them to do it. Like you in terms of your reporting, getting information about the gold market out there, that's what GATA has been doing. They've been doing a very good job at it, in my view.